He's. It's on.
Yeah. Oh. Hey. Hi, Doug. Hi, Doug. Okay.
I didn't get that part. So.
Ready? 3, 2, 1. Welcome to Prime Properties. I'm Michael Morris, and sitting with me, I will say, not always, but enough at this point, is Stacey Plybon from eMerge. How are you, Stacey?
I am well. Thank you.
Stacey, I thought that this would be an important show to talk about, and I knew that you could address this. I was looking at an article called "The Bank of Mom and Dad Could Rank High as a Mortgage Lender," right? So right now it's looking like it's the 7th leading source of people getting money for a home. But the reason I thought this was important is 41% of all first-time home buyers will carry student debt.
Yes.
So of course they can't afford to buy a home with it. How could they afford to buy a home is what I want to know. How many young people are you seeing coming to you, they have student debt, and then they got to borrow the money from somebody else?
Yeah, that's actually very common. Parents are doing all sorts of things to help their children get and obtain a home. So even things as far as doing a home equity line on their home. So they're giving up the equity in their home to assist their children. So that's common. And believe it or not, you're talking about people 35 and under, solid, maybe even 38 and under. So it's actually quite a few people.
But when you're showing a house, at what point in the process are you asking them about? Because I the first time I bought a house was, I gotta say, almost 18 years ago,
Mm-hmm.
and it was the conversation came up about how much would you put down?
Right.
Okay. I don't hear that being said a lot. It's what's your credit more than anything, because it seems that people they want it and they'll do anything to get it, but they don't really have that nest egg to put into it. So
Yes.
where are you at in that conversation when somebody comes to you? I mean, I know it's kind of a delicate subject, but you've got to broach that at some point.
Yeah, we absolutely do. And that's usually at the first showing of a home. You sit down and you talk with them about their actual goals and things of that nature, what they're looking for in a home. But then you also dive into their financials and what they think their credit is, because debt to income is extremely important when obtaining financing. So that happens pretty early on. And it's also important to know if they're receiving gift money, because there are additional documents that the lender is going to need from them, and sometimes those take time. They have to track the money that is received from that buyer. So, if mom and dad were to give money, that's fine. We need a letter. Then we need to track that money into your bank account. We need to track the money and how it was obtained by your, whomever it is that gave you the gift. And in this case, it's typically mom and dad. So there's a lot of steps involved, and there's time that is needed for that, and a lot of times it needs to be added into your contract, your timeline. So if we have anything too extreme, anything that would take an excessive amount of time to verify those funds, we would have to work that into the timeline of your contract when you go into contract to allow the lender the opportunity to verify.
But you're seeing this,
Yes.
every day now.
Yeah.
Whereas, even when I did it, it was when I was married at the time, when we went to look at houses, I already knew what our kind of threshold was, what our 10% down was to avoid PMI and all that. But are people even aware of PMI anymore at this point? Because it seems like you can't worry about PMI if you don't even have 5 to 8% to put down, right?
Right. Well, it's 20% for PMI, and we do have some conventional options that are 3%, 5%, but again, you have to qualify with your credit and your debt to income. So that's something that is available. I feel like there's a lot of misconceptions. Everybody kind of has that burnt into their head that you have to have 20% down. So that seems to be the case, I think, a lot.
But do you think that's because that was a traditional thing?
Yes.
Because when growing up, that was always kind of drilled in my head that you needed to have that.
Mm-hmm.
I don't know that that's being passed down from generation to generation anymore, because this number I found staggering. When you look at the 7th leading or the seventh ranking mortgage option is to borrow from your grandparents or parents.
Yeah.
I'm not talking about a few $1,000s. Nationwide, there was $317 billion worth of property, 1.2 million homes. That's a lot of dough that has come from somebody else, that whether it was their retirement,
Yes.
they took it out of their own home. That's a shocking number of people.
It is, but it's a lot of money that buyers have to bring now. I mean, well, I shouldn't say now, but it's a lot of money that the buyers do have to bring. So it ends up being closing costs, which I feel like closing costs have really risen a lot. And those are lender, based, but closing costs now are anywhere from $4,000 to $5,000 just to close a loan. And those are on a 175, 225,
And they're non-negotiable.
loan. Those are non-negotiable.
So you're paying what they're telling you to pay.
That's right. So closing costs being what they are, that doesn't even include your down payment. So now you have to have a 3%, 5%, 10%, 20% down payment, whatever your program is. But, we do have some down payment assistance should you qualify. So, there's OFA. So that'll give you...
Don't just say OFA like everybody out there gets it, because somebody who's 25 could be listening right now and not know what that means. What does that mean?
Yeah, so OFA is what everybody most generally knows it as, first-time home buyers. So that's your first-time home buyer down payment assistance, but really it's a grant that gets tacked on to your loan, and you sell before 7 years and you have to pay it back. It used to be prorated, but now you owe the entire amount back. So those are some nuances that are important to notate prior to utilizing such an grant or assistance. So sometimes getting money from mom and dad might be a little bit better because they're going to be a lot more forgiving on you.
Yeah, they might not bother you every single month with that note about I need this paid back.
Well, I got to tell you, we went for at least a decade and a half telling people you have to go to college or you're not going to amount to anything, and what you amounted to was a giant debt. I know in the past I worked for the state of Ohio, and I knew many state employees who were sticking around and paying for college for their kids. So there are parents out there that took care of college for their children, and that's great. Those kids are maybe the ones that don't have to ask for money, but the kids that had to pay their own way through college, they're finding themselves on the short end of that stick with not getting the hourly rate or the job that they wanted, and they are stuck with this debt. And the banks have done what they can to try to accommodate that situation, because it is an epidemic, essentially. I mean, it really is, the amount of debt that folks are coming away with in 2 years, 4 years, or more. And it's just getting money from mom and dad is a lot of times, or grandma and grandpa, the easier way to go. And that gift money is saving a lot of folks from having to rent.
Well, I see a lot of people, especially, people that work with us on a day-to-day basis, and that college, they are saddled with that debt.
Yes.
To the point where they are in an apartment, not because they want to be, but they can't get, you can't have two sources of debt that are going on, and they're both big.
They are.
Some of these college loans are as much as, paying it back per month is as much as monthly bill on, say, a $135,000 house.
Absolutely. Car payments now are $400, $500, $600, depending on how crazy you went on the purchase. But you've got an equally large amount that you have to pay on your student loans. Folks are having to pay $600 a month, and that's for a very long time.
Right.
And they do add interest and whatnot. So, and there's nothing you can do about that.
So are you saying people shouldn't go to college? I know that's not what we do on the show. I'm just asking that question.
That is
You're
not
a realtor.
what we do on this show.
I was just asking.
Well, I do have opinions on that, though.
Well, let's say that you have this college debt, but that's not even what's wrapped into this total number of the mom and dad part of this. Mm-hmm. This is people don't have it in the bank to put down. So the statistics show 1 in 5 of the buyers, these new buyers, will get gifts or interest-free loans from family members. The average amount of that is $39,000. That is a huge number.
Yeah.
So when you come to, I just want to know, when you're sitting there with that first-time home buyer, are their parents in the room at this point? Like when it's really gotten down to it,
Yeah.
and they're going to commit, you're not really talking to one couple. You're talking to two couples, right? You're talking to mom and dad or grandma and grandpa and the kids that want to buy the house.
Sometimes, but to be honest, no. I'm not sitting there with mom and dad as well. Mom and dad are sitting with the lender and going over those documents, but really mom and dad's there to give the money, and that's it. So I meet them for the walkthroughs and things of that nature, but I don't really sit down with them and talk strategy over this house. They don't really dictate, in my experience, what the house is going to be or where it needs to be or anything of that nature. It is truly just a gift. It is something that we talk, the buyer or buyers and I will talk about their budget, where they want to keep their monthly payments, things of that nature. And then I'll get an idea, of course, of their debt to income, their credit, so that I can kind of direct them appropriately to the lender that I think would be best suited for them. And then at that point, we just talk about the house and what we need to do. Mom and dad, they're over there talking to the lender. They're supplying the lender with the proof of funds and where that money came from, the tracking, like I said, the verification of that money. And that's it. And it's really, there's a lot of cost involved in purchasing a home, and closing costs, down payment, inspections. So, yeah, it can be. $39,000 is an awful lot. I feel like that's probably more of a West Coast number.
Well, I think that, again, you are taking the East and West Coast into it. So the New York area and you know, San Francisco, that balloons that number up. But still, even if it was $10,000,
$10,000 is a lot.
That's still a lot of money.
It is. Yeah.
When you're showing properties to somebody, I guess you have to kind of ballpark it. Like, they have to tell you where they're trying to look or what my budget would be. But first-time home buyers, I don't think they really spend that much time. Here's what I want: white picket fence. I want a backyard for kids. Right. So they give you all their wants.
Sure.
At what point do you kind of say, well, that house is $500,000 and you've got $175,000 range?
Yeah.
Like, how do you start whittling that down?
Well, you do. You have to, you know, I'm a mom, so I can be blunt and to the point and sweet at the same time. But that's really what you have to do. Well, honey, here's the deal, though. Here's reality. Those things are great. First-time home buyers, you got to crawl before you walk. Let's get you into home ownership. Let's get you into a solid home that you can build equity on, and you can make some money when you go to sell it in 5-7 years, you know, 7 to 10 years, whatever have you. Then you can get that white picket fence, $500,000 house, you know, whatever.
But you just said something that I'm curious how you do this. When you're looking at a home, you're looking at the value of, you're an expert in real estate. So you're looking at what's going to mature, what's going to have value to it.
Yeah.
Whereas they're looking at it in the emotional sense.
They
right?
are, yes.
When you're showing somebody it's a first-time buyer, what are the specifics you're looking for? Because you're really kind of taking the lead on this, right? So you've got to put them in the best scenario for them financially, but also to address all their needs, or the majority you can.
Yeah, it's a fine line to walk because it's not my job to steer them, and in fact, it's illegal. So
there was
no
steering going on. I'm just saying you're pointing them.
Of course, but that's what you do. I break it down as easily as possible by just saying, you've heard of the stock market, right? And that's where people go and invest their money and they try to make a profit, okay? Well, you've also heard of the housing market. It's the same thing. Yes, the emotions are there and you're going to create memories and you live your life and you're going to call it home and maybe raise some kids. But at the end of the day, we're going to put money into something. You're going to maintain it and it's going to make you money. It's security for your future just as much as anything else. So while we want all these great things, can they come in 3 years maybe after you save up some money? Can you put those finishes on that are important to you? Maybe put that white picket fence out. Maybe go with the chain link for now. Put the white picket fence up in 3 to 5 years when you're more stable and, you know, can afford it or whatever have you. But yes, I try to always focus on longevity, you know, and the selling point, the resale value of your home. I want to set people up. I want them to feel like they made a good decision. This is the whole point of purchasing a home. And my opinion. This is my opinion. This is how I structure my business. And I think that's very important, and I try to stress that. Definitely, I think mom and dad appreciate it too.
But that, I would think you would need somebody, because I remember the whole pattern of doing this and looking at 10 to 15 houses, and to me it was just, everyone has a garage and a door that I'm going to walk in and out, because I wasn't going to be there. Now,
Yeah,
you know, you're spending 80% of your time at work. When you do come home, you want to make it your kind of castle.
Yeah.
But you're looking at it from, here's what the taxes are, here's the school system, here's that. So if you're looking at it, what are the things that you would say are the benefits? If you're looking for something that's going to mature, that you can get money out of so that you can move up, what are the things that you look for?
I think I do look at district. I look at property taxes, and we just had a reevaluation of property taxes every 6 years. So we're pretty solid. We know for the next 5 years those are staying the same. And then, of course, at that point, if we've got somebody that is really, they've got a small window basically to work in. These parameters have to be really tight, and they want to get into a nice neighborhood or a specific neighborhood. At that point, we'll start looking at the meeting minutes. We'll go to council. I'll go to the council page and see what city council's voting on. What are they doing? Are they planning on putting a, $2 million, 3.6, whatever, something that is going to cost the city something? So are taxes coming? So are they adding more taxes, income taxes? What do they look like in that? Is there a RETA tax here? Because that's an additional tax for living there and working. So yeah, I will take all of that into account, especially for young couples with children, young families, and even retirees, people who are on those fixed incomes.
I know that's one of your favorite things is the older set.
Yes.
That we need places for the older group to go.
It is such a need, and I think they've earned their right, and people need to start focusing on that. And I love taking care of the, I don't want to say elderly, but definitely.
The older than you?
Yeah, older than me. I do. I like setting that up. I just talked to a gal the other day. I think I freaked her out though. She's looking for her forever home, and she's my friend's mom. And so I'm like, well, let's talk about, end of life care. What you're wanting a forever home, and you're looking at 2-story homes. Is that really what you want? Don't you want, if we're doing 2-story, can we do a first floor master and a first floor laundry? Because maybe, you're going to need to have access to a hospital bed, or maybe you're going to need a wheelchair to get around in your home. And if this is your forever home, I want that for you. I want you to be comfortable even, at the end. And it's such an awkward conversation, but I'm kind of the queen of awkward conversations.
I know, I spend time with them.
So bring it on.
But that's, again, when we're talking about first-time home buyers, I think that there are a lot of real estate companies, realtors out there. They have a job to do, and it's to sell properties.
Yes.
But I would hope that there are ones out there that not will steer you where they want or where I can get a commission, but where it's going to work for you, because
benefit. Yeah.
I've had people that when they bought a house, they had specific things in mind, and they settled because whether it was the income level wasn't enough or the down payment, and they settled, and they couldn't stand it from day one that they moved in, and it causes a problem because it's every single day I'm going to a place I don't like.
That's right, and that is a fine line. I mean, definitely don't want to push too hard or persuade anybody. It is ultimately their decision, but I have to do my due diligence. I am being hired as your fiduciary, and it is my job to point these things out and have those awkward conversations, or just kind of be blunt and to the point of let's be real here. We have a lifestyle. We have a day-to-day life that you're trying to live. Yes, you got approved for $250,000, but you'll live more comfortably on a $150,000 mortgage note than a $250,000. So
is that the worst thing that you can see? Because especially when I was younger, it was always what you could get approved for. Yeah. And it was before the downturn in the economy.
Yeah.
But it was, we would be at people's weddings and somebody would say, I just got approved for a $400,000 house. And I'd be like, well, you make $65,000 and your wife doesn't work. but it was a different time.
It was.
When people were buying houses, it was, I want to tell you what the sticker is on this house, right?
Yes.
So now
Sure.
it's not as hard as it was, let's say, 5 years ago to get money for these things from banks, but they are being choosier about how they lend this money out.
They absolutely are. They are being choosier, and again, back to the student loan debt, that seems to be the biggest epidemic right now, and that's something that they've been talking about. There's a buzz. I'm not in the lending industry, obviously. I'm more in the real estate industry, but I do have a lender that I would love to have onto the show because I think that he could enlighten us immensely on these types of programs and different lending products that are going to be coming available, that these banks are absolutely working on to maybe take it a little easier on mom and dad, but to also give those who have all of these student debt an opportunity to be homeowners. That that is important. And I know I was on the show, one of Marty's shows, and we had a difference of opinion on homeownership. And
you had a difference of opinion with Marty Reed? Everyone has a difference of opinion with Marty Reed. That's not saying much.
It was interesting. It was my first time with him. So, but I always knew it as being, like I said, your security. That was your foundation. You own your home, you build your equity, and it's security for your family and yourself. If things hit the fan, you sell your home, and you kind of go on worst case scenario, or you maintain your credit, get your equity line, and then things are taken care of, or maybe you reinvest, whatever have you. It's that financial freedom that you get with owning a home and kind of making those right decisions. And I love that. I maybe I care too much, but I really do enjoy helping people to realize that. And I feel like that's something that nobody really gets taught. I was lucky to have the parents that I had, and seeing what they did at such young ages. They were super young, actually, when they had me and bought their home, and I get to watch that. So I want to help other people with that as well.
But I think what you're saying is a good point, because the other part we're not keeping in mind is, I believe it's over 70% of Americans don't have $1,000 in the bank.
In the bank.
That makes it tough. Now, where that money's going, we have no idea. But you have credit card debt, you have school loans, and then you're trying to buy a house. And again, if you don't have somebody on your side, not a lender at the end of the day, they can be on your side if you've got the money, but you have to have somebody that is looking out for you and not saying, just because you got approved for this.
Yeah.
I believe the saying is, what looks good to you is not good for you. Yes, I hear that like once a week, straight in my head.
Too.
But I think that's another thing, is we have to be, when you're dealing with first-time home buyers, you have to know what their threshold is. It's not necessarily the commission that you're going to get for selling the house.
Oh.
It is, you don't want to burn them by saying, I got you in this house, you settled, and now you can't afford it.
That's right. I would much rather help you in a way that would keep you stable than to help you in a way that's going to put you into harm's way. I don't need to profit from that in any way, shape, or form.
And again, this is not just you. This is across the board.
Across the board. Yeah.
But I think that the last thing we'll say about this for the week is that there isn't any shame in this, because everybody is kind of there's a generation that's in the same boat.
That's right.
And a lot of things that have happened are not because of anything you did.
Yep.
The debt that you're racking up as a young person should not keep you from being a homeowner.
That's right.
You should be willing to get help.
The student debt.
Student debt.
That you are accruing. Yeah, we don't want to talk about.
Yeah, if you just have credit card debt, that's your own fault.
Yeah.
And we will have that lender on to talk about how to get out of that.
Absolutely.
Stace, before we leave, tell people how they can get in touch with you.
Sure, okay. Central Ohio Homes and Lifestyle on Facebook. Please come out and like us. And then also centralohiohomesandlifestyle.com. My name is Stacey Plybon, Emerge Real Estate.
And you'll be back next week, so people, you'll get to plug that again.
Okay.
I want that.
Sounds good.
Stace, thanks for coming on. We will talk to you next week on Prime Properties. Have a good weekend.